Hello, this video is talking about the JobKeeper payment. This payment, it's been talked about. We've been given little information or little drips of information along the way, big chunks of information. We've had a lot of questions still needing to be answered. We've seen it be a big frustration for clients of ours around uncertainty as to what it means, how it will work, but also fielding a lot of questions from their employees around what this means for them, and it's nice to finally get some clarity around this, although it's not going to be ideal for every business that would be eligible, and I can see that some businesses, due to cash flow constraints, will choose not to participate in the JobKeeper scheme. But for those that can fund it and access funding to use it, it is a great scheme. So I'm going to run through the content. I'll be looking to a document to my left, to your right, occasionally to make sure that I cover off on everything I planned to present to you in this video. I'm not going to edit this video. It's about getting the information out to businesses as fast as we can. You'll have to deal with the bloopers that are still there and the stops and starts that I do along the way. So let's get stuck into the content. So the JobKeeper payment received royal assent last Thursday morning. The legislation was created as a framework with Treasury and the ATO setting the rules. The ATO has, as of yesterday, issued some content on its website, which gives us a little bit more insight into how this will actually work and how you apply for it. So the JobKeeper payment is actually a wage subsidy. It's a wage subsidy to businesses to help them retain and re-engage their employees during the COVID-19 crisis. The application process will be online through ATO online portals. So if you're doing the process or the application yourself, it'll be through your ATO business portal. For tax professionals that you use, being tax or BAS agents, it will be through their respective ATO portals. Now, the process for application is a two-step process, and they can be made from Monday the 20th of April, so this coming Monday, unless they're released sooner. So the two steps. Now, let me just be clear on, a lot of people have registered their interest online for the JobKeeper payment weeks ago when this was first spoken about. Now, that process was purely just getting you on a mailing list to receive future JobKeeper information. It does not perform any step in you actually applying or receiving the JobKeeper payment. So there are two additional steps that you need to make. The first one is to enrol. Part of that enrolment process will be determining that, one, you're an eligible business, that it'll be also determining who your eligible employees are and how many of them there are, and also providing the ATO with the bank details of the bank account that you want the JobKeeper reimbursement to be deposited into after you make your claim. The second step, in that first step also, you need to confirm that you've sent your eligible employees a new form called the JobKeeper Employee Nomination Notice, and that you've received them back from your eligible employees. So that's step one. Step two is actually apply for the reimbursement. Now, step two happens after you have paid the JobKeeper payments to your employees, and it happens once a month. The claims for April can be made between the 4th and the 31st of May. And once that claim's then made, payment will be deposited back into the bank account that you nominated in step one. So sounds pretty simple, but I can see there's going to be a few little difficulties along the way, and I'd encourage you to engage the services of your financial advisors, particularly in the enrolment process, in determining who the eligible employees are and also whether you're actually eligible to begin with. So moving along, this new form called the JobKeeper Employee Nomination Form. It's a form that's provided by the eligible employer to their eligible employees. A separate form for each employee. It's basically advising the employee of their employer's intention to participate in the JobKeeper scheme. The employee then needs to complete the rest of the form. There's certain questions that are asked, things they need to answer. They need to complete and return it to the employer, and basically it's agreeing or not agreeing for them to be nominated to receive JobKeeper payments from that employer. The form doesn't need to be lodged, it just needs to be retained by the employer for a period of 5 years. So the JobKeeper payment scheme starts for full pay runs that began after or from the 30th of March 2020. It's an amount of $1,500 per fortnight, that's the wage subsidy, before tax per employee or per eligible employee up until the 27th of September 2020. Now, there has been some mention of a date of the end of December being mentioned in the legislation, but at this stage, it's quite clear that it is only proposed to extend to the 27th of September, and we're not sure of the exact reason for the mention of that December date. Potentially it's giving them some flexibility to add to this down the track. Who knows? So for an employer to be eligible, they have to have business turnover of less than $1 billion and estimated turnover that has likely or will likely fall by more than 30%, more than or equal to 30%. So that's going to capture a lot of businesses. For businesses with turnover in excess of $1 billion, their turnover has to have fallen by more than or equal to and more than 50%. The business must not have been subject to a major bank levy. And when we're talking turnover, for groups, it's aggregated turnover. So it's turnover of that business plus turnover from carrying on a business of any business or individual connected with or affiliated with the entity. So for grouped entities, there's some major considerations to be had there. If you're self-employed and you meet the less than $1 billion turnover and you're not a permanent employee of another employer, you can be eligible for the JobKeeper payment. You need to do an application also and provide certain information like your ABN. You need to nominate the owner who's going to receive the payment, the owner's tax file number, and a declaration needs to be made as to recent business activity. The payment will then be made monthly into that nominated person's bank account. For partnerships, only one partner can nominate to receive the payment, plus any eligible employees. So note also for a partnership that a partner cannot be an employee, and clearly they still need to meet all the other turnover drop eligibility criteria. Similarly with a trust, only one individual beneficiary who performs work but only receives a distribution can nominate to receive the JobKeeper payment. So where they're doing work for the business that's run by the trust and they don't receive a wage on payroll, but they receive distributions, they can nominate one of those such beneficiaries to receive JobKeeper. Similarly with companies, for directors and shareholders in receipt of director fees or dividends, one director or one shareholder can nominate to receive or be nominated to receive the JobKeeper payment in addition to any eligible employees. So the director cannot get it twice though. So they can't get it as a director and as an employee. It's one or the other. If you're in receipt of rent as a landlord, but are not registered as a business, you don't qualify for JobKeeper. So as far as measuring turnover and if it's falling, it's compared to the same period in the prior year. It's based on turnover for GST and BAS purposes. So if you're registered for GST on a cash basis, it's based on turnover on a cash basis. Similarly, if you're registered on an accruals basis, it's based on turnover on an accrual basis. It includes all GST taxable supply income and GST-free income as well. Where a business has not operated in a prior year, or there's a reason why their income is lumpy or seasonal, you can apply to the ATO for discretion in determining whether you've met the respective drop in income test. And it only includes Australian-based income. Just had a little break there. This next section is quite long. So to be an eligible employee, you need to have been on the books of your employer as an employee on the 1st of March 2020 and continue to be engaged by that employer. It includes full-time, part-time and long-term casuals, and also stood-down employees. The casual must have been with the employer on a regular and systematic basis for at least 12 months as at the 1st of March. The employee must be at least 16 years of age as at the 1st of March 2020. They must be an Australian resident, and that can include certain holders, certain people that hold certain types of visas, and I won't go through the types of visas there, but you can look that up if you have an employee in that situation. If you're receiving parent or paid parental pay from Services Australia, you're not eligible. However, if you're on parental leave from your employer, you will be eligible. If receiving workers' comp, you will only be eligible if you're on reduced hours, but generally not eligible if you're not working. So if you're on workers' comp and receiving some sort of payment for work performed, then you will be eligible, but not eligible if you're not working at all. It includes employees as at the 1st of March 2020, stood down after that date. They will be able to participate if re-engaged by their employer. Don't you love working at home at the moment during this COVID situation? The neighbours decided now's a good time to do something with some sort of power tool, oblivious to the fact I'm recording. So we're just going to move along. I'm not going to pause for this. I'm sure you can hear me otherwise. Okay, so if an employee is receiving some sort of payment from Services Australia and starts to receive the JobKeeper payment, you've got to notify Centrelink to avoid a debt being needed to be repaid down the track. If you've received the $750 economic support payment from Centrelink and then transfer to the JobKeeper payment, that does not have to be paid back. So that's great news. Most employees will need to do nothing. Some will have to do some additional things. Obviously, every eligible employee that agrees to participate once nominated will need to fill out that JobKeeper employee nomination notice form. In particular, the purpose of that form is also to determine where employees have multiple employers. They can only get the JobKeeper payment from one employer. So the purpose of the form is to ensure they're making a known choice of who their nominated principal employer is. Employees that are not Australian citizens will need to notify their employers of their visa status to determine their eligibility. And if you're receiving, or an employee is receiving, other income support from Services Australia, as mentioned before, you need to notify your employer of that fact and change in circumstances. The JobKeeper payment is included in the employee's taxable income, so it can also affect your child support assessment, so keep that in mind. We'll just have a quick pause. Okay, so thank you just for being patient and waiting for me. I had two things happen then, and this is just a crazy time at the moment working from home. I closed the door because the neighbour is hedging, doing a fantastic job, but also our beautiful little dog was trying to get into the study with me. So let's get back to the payment process. So it's a $1,500 a fortnight payment to the employer per eligible employee. The employees will receive at least $1,500 before tax per fortnight. They have to receive that for you to be eligible to claim it back. So I'm going to explain now why I said at least $1,500. And before I go to that, $1,500 is the gross before tax amount. So after tax, if it's a person that's claiming the full tax-free threshold with you, it will be $1,308 a fortnight. If all they're getting is the JobKeeper amount or wages and a top-up to the $1,500 gross per fortnight amount, they will receive $1,308 after tax. So let's run through a few scenarios with this. So if the employee is still working with you and normally earns more than $1,500 gross a fortnight, nothing changes in their pay. The $1,500 you get is purely a wage subsidy to help you cover the cost of that employee's pay. Now, if their pay is actually then just processed as it would normally be for the hours that they've worked, so nothing different there. If an employee currently earns, in that scenario is why I said at least $1,500. They're already earning above, so they continue to earn above. If an employee is earning or normally earns less than $1,500 a fortnight, they will start, once you start them on JobKeeper, they will start to get paid from you $1,500 gross per fortnight, less tax. So that pay could be just a straight $1,500 a fortnight or $750 a week gross JobKeeper payment, less the appropriate tax, or it could be made up of hours they may have worked for you during that time, plus a top-up, like a JobKeeper top-up line item in their payroll that brings their total gross for that week to $750 or the fortnight to $1,500. Now, if an employee has been stood down and you've re-engaged them, you must pay them the minimum gross of $1,500 a fortnight or $750 a week. And like I said, that can be made up of just purely straight JobKeeper payment or a combination of hours worked and a JobKeeper top-up. No super is required to be paid on the JobKeeper top-up amount, and the logic here is because they haven't performed any work to receive that amount. But super does need to be paid on any wage component for work they've done of that $1,500 fortnight. Now, in respect of leave, if this is not a casual employee, so if we're talking part-time and full-time employees here, they are entitled still, when they're on partial or full stand down, irrespective of whether they're getting the JobKeeper payment or not, entitled to still be accruing annual leave and personal leave on the number of ordinary hours or normal ordinary hours they worked prior to partial or full stand down. So it's important when processing pays that you not only capture the work they've performed by processing their ordinary hours or normal work hours as you would in any case, the JobKeeper top-up, but also record the number of hours that they have been partial or fully stood down for, so that the appropriate leave still accrues in your pay run. Now, Xero has a workaround on that, and we've actually already posted a video on our YouTube channel and shared across the social platforms as to how to process stand down time. We'll be doing a separate video also on how to process the JobKeeper payment in your payroll. Xero is also working on a better process for the stand down time. So the video we've posted is using their suggested method as at this time, and we'll revise that when we get further notification from Xero. So payment is made by the ATO in arrears on a monthly basis. And one thing we have, the ATO have notified on the website information they issued yesterday, is that they are allowing us to back pay for pays earlier in the month of April, where we were all a little bit uncertain and a bit gun shy in, you know, starting to process JobKeeper payments to employees when there was so much that was uncertain. They're allowing us to backdate payment of wages provided they occur by the respective date later in April to qualify by the end of the second fortnight period in April. That won't, I believe, happen for months after April, but they have allowed that concession for April. So what issues do we still see with the JobKeeper payment? You know, initially it was thought that the employer would be able to choose who they re-engage from their stood down employees. That appears not to be the case, unfortunately. It seems to be that this is if an employer nominates to participate in this scheme, at this stage it appears that it's a one-in, all-in situation. We also thought initially that surely that the employees re-engaged would have to perform some sort of work for the employer to receive this payment. That also seems not to be the case at this stage. So it can be that the employee is re-engaged to do small amounts of work. We'd encourage, you know, if you've got to do this and you're choosing to do this for your employees, find something for them to do. You know, think of the things that you could be working on behind the scenes to help your business flourish when it can return to its normal state of trade. But it would appear that, yes, employees can receive the JobKeeper payment if you've got nothing for them to do. And again, coming back to the one in, all in, it's likely that you may find yourself in that situation. So both of those points, and particularly the first where it's a one in, all in, and the fact that this is an in arrears reimbursement, we see still a major issue for businesses being this cash gap. You know, we're finding that some of the businesses hardest hit in the hospitality industry in particular don't have the cash reserves sitting around to be able to fund a $1,500 gross a fortnight payment to all of their eligible employees for a month to then have it reimbursed. So the government is suggesting in that case to reach out to your banks to secure temporary funding for the purpose of making these payments. So it's a conversation that needs to be had with your bank. And yes, there seems to be hoops that have to be jumped through, but you know, this is a great scheme if we can make it work cash flow wise. And I really suggest that if you don't have that cash flow, that you connect with your advisors and you get some sort of application happening with the bank. Now, you know, you may not be eligible for this JobKeeper payment in April, but you can become eligible for it in later months. But it might not extend for the whole 6-month period for you, or at this stage, because at this stage it is finishing at the 27th of September. Now, we do want to make a warning with this, or 2 warnings, is the correlation between the JobKeeper payment and the apprentice traineeship 50% wage subsidy. You cannot get both that and the JobKeeper payment. So whilst you may have claimed or wish to claim and be eligible to claim for the period from the 1st of January to now, or to up to the point of when you become eligible for JobKeeper, that is fine to claim that. Once you become eligible for JobKeeper and you're claiming it for the same apprentices and trainees that you're claiming the 50% wage subsidy for, you can't receive both. And clearly, I would think that in most cases, the JobKeeper payment is going to be more financially positive for the business rather than the 50% wage subsidy. So at that point, you need to make the decision on what you're doing. Again, connect with your advisor and weigh up. Do you stay on the wage subsidy or do you switch to the JobKeeper payment? Also, I want to warn businesses, because we are seeing a lot in the marketplace and hearing a lot of businesses wanting to do their utmost to capture as many people as they can to secure the JobKeeper payment. Now, we warn you, you know, the ATO has very very good data now that single touch payroll is around. They know who were on your books at the 1st of March already. They can also see who's had payroll processed for them prior to the 1st of March. So when you're having employees appear after the 1st of March through single touch payroll that haven't had pays processed previously and weren't on your books on the 1st of March, the ATO is going to pick up on that very easily through single touch payroll data. They've also seen an increase in pay-as-you-go withholding registrations after this was announced. And again, that is so clearly an obvious audit target list for them after that. And they have advised that they will go hard on anyone that chooses to do the wrong thing with this JobKeeper payment. So let's just use it for what it's intended for and follow the rules, and then we can't be held accountable for fines and paid back later on. So I hope that has helped you understand the JobKeeper payment a little more. Yes, it's ideal. It's a great scheme for those that have the cash flow. For some businesses that don't have the cash flow, it's going to be a little bit of a hurdle, and it might be that they just can't participate in the scheme. So we need to keep the communication open with employees, and I would implore you to reach out to your advisors yet again. You need to get the right processes happening here. You need to make the right application, the right determinations as to your eligibility. So I hope that, even though we don't want to see businesses in downturn, but I hope that if you are in downturn, you qualify for this payment and you have the cash reserves or access to them to make this work for you to help retain and re-engage your workforce, so that when we get to the other side of this crazy crisis, you are ready to really switch the on button on and resume trading in the fashion you were used to prior to this. So thank you, and have a great day.